Well, hello everybody, and welcome back to another edition of the Forex Market Preview. My name, of course, is Jason Stapleton, and if this is the first video that you're watching of these, congratulations, thank you for being here. And what I'm going to try and do is show you a couple of things running into next week that might be of value to you. As always, these are just my opinions, and things can always change on a dime. But what I try and do here is focus things around a basic understanding of structure analysis, and we do that using a variety of different techniques. And I try and teach you a little lesson. So to hopefully at the end of the week, not only do you have something to watch for as we move into the coming week, but you also leave a little bit more, I guess, a little bit more savvy than when you first arrived. And of course, if you're one of the more than, close 55,000 people now who've subscribed to these videos, thank you very much for being here. And if you like the video, all you new folks, feel free to subscribe. And today, I'll tell you, every once in a while you get some people who will say, "Oh, these guys they only show the good trades, they only show the winners, they never show the losers." And I hope that no one will ever accuse me of not showing the winners and the losers. This week was just a terrible week. I don't know. I didn't look. Every week we do something called War Room, and you come in and I spend the morning telling you what I'm trading, and if we're trades on, we cover those, and I do it in real time, and we track everything that we trade so that we kind of have a history to show everybody. And if you've been with me for a while, you've kind of seen that. And some weeks, when you do that, some weeks are really, really good, and others really stink. And last week, I think we finished out the week up a couple hundred pips or so. And again, it's not a signal service. It's not what it's designed to be. It's really just designed to kind of show you over time what happens when you follow a consistent set of rules and you stay disciplined. That even though certain weeks or months may be bad, that overall you can still have a pretty good year if you just stick to a plan that you know is profitable. And like I said, last week, a pretty good week, couple hundred pips, whatever Akil put out, because he kind of keeps track of that stuff for me. And then this week, I think we gave it all back. I had one trade on pound yen that lasted from about Wednesday to Friday before it stopped me out. And it's easy to look at those weeks and immediately start saying to yourself, well, what did I do wrong? Two steps forward, two steps back, those kinds of things that it frustrates the life out of you. I remember Tom Sosnoff. He runs a site, basically a television network called Tasty Trade, and you can go and check it out. It's really cool. He does options trading, and I've been an option trading dabbler for years. I know a really good options trader named Rod Casilli, and he's helped me quite a bit as I've tried to learn the options business. And I really incorporate a little bit of what I already know here in the technical side of currency trading and apply that to the options market. And I won't pretend like I'm a really good options trader because I'm really not a very good one. But I like there's a lot of different moving pieces to it, and when I like the challenge of it, I guess. And so I treat it a lot like I treated this particular Forex trading when I got started. It was like, all right, we'll use some play money, and then when we feel pretty good about our play money, then we'll put a very small amount of real money in there, and we'll see if we can't develop a little strategy that makes sense and we can show is profitable over time. And so I would say I'm in that phase right now where I got a little bit of money in it, but it's not enough to really. I'm not doing it because I'm gunning to be some day trading options trader, right? I just want to understand it, and I enjoy the process of it. But Tom Sosnoff, of course, runs this network called Tasty Trade, and you can go watch the free videos. And I don't remember the web, tastytrade.com probably. And I remember he was commenting one time during one of his morning rants. He said, some days you just want to come in and you want to take white out, and you want to just put white out on the screen over your profit and loss. Take a little sticky tab and stick it over the profit and loss there, because things have been so bad for so long that you can't even stand to look at how much money you've lost, all right? How much money you're down. And I think that's compelling for a couple of reasons. And maybe the biggest one is that you understand that even a guy like Tom Sosnoff, Tom is the guy who invented Thinkorswim, the platform that TD Ameritrade now uses as its basic trading platform. He was the guy who invented it. He sold it to them for whatever it is, $100 million or something like that. And even he, after all the years of being an options trader, still knows what it feels like to come in and sit behind the desk after days, if not weeks, of really crummy trading and just having idea after idea after idea go bust. And be at the point where you just want to grab the whiteout and start putting whiteout on your monitor. It lets you know that this happens to everybody, that there's always going to be a time when you feel like the world is against you and you feel like everybody is gunning for you and you don't feel like you can do anything right. And everywhere you turn, people are telling you how stupid you are and what a pointless endeavor this all is. And I will admit to you, both on the trading side and on the coaching side, I have felt that kind of adversity. But the cool thing is that we're all kind of in this together. We're all experiencing the same thing, the ebb and flow of the market and the ups and downs. And what's really critical is that over time, those down times don't equal more than the up times in terms of our profit at the end of the day. And there's really just a very few things that we can do in order to ensure that. Number one is we just have a plan that we've tested and that we know is profitable. Or at least historically we know it's profitable. We can't ever know in the future what's going to happen, but unfortunately the only measuring stick we have is the past. And so we get this plan and we test this plan and the plan shows that it's going to be profitable and we write it down and we know what our rules are and we've verified by using our demo accounts that we can reproduce in some form or fashion what we saw historically. And then when we start putting live money in the market, we recognize that each and every day our responsibility is to come in and trade our plan regardless of whether this week was a great week or this week was a terrible week. And I'll tell you, this week was a terrible week. I would love to mince words and say, well, as an educator, I want to come in and say, well, this is a training opportunity for us to take a look at, how we follow a plan and discipline and all these things. And some days I just feel like saying, this was just a crummy week. And so what I want to express to you in this week is not to try and sugarcoat things, but just to tell you, if this was a crummy week for you, don't worry, this too shall pass. You're going to find a time when this is all going to make sense, and if you can stay on the path long enough, there's a high likelihood that you're going to see results, positive results. But anyway, I know that's a really long opening, but let's talk a little bit about what we're seeing here. First, let's take a look at gold. Gold breaking out of its high. This is the 1 hour chart. Let's move to a daily chart. You can see we broke out of the 1180s here. The market had been in a downturn. Boom, we violated those highs, back up to the highs. Very shallow retracement here. Gang, very shallow retracement into 1200. Now back up. Looks like we did in fact. Why is my cursor not working? Hang on, let me get the right cursor here. Dot crosshairs. Just doesn't want to put the crosshairs on there. So we barely broke into new structure highs there on gold, but it is a break of structure to the upside. Watch for a press back down into 1246s, somewhere there, 1246.20s. That's where the previous structure level was, and opportunities to buy there. Let's move on. Euro USD. This was a pattern that I showed earlier. It was actually the same type of pattern that busted me out. It's called a Fibonacci inversion trade is what I call it. It's based on a very simple 1618 extension and selling as the market comes back down. This particular trade was a winner, although it was on a daily chart, so we didn't take it. I just pointed it out to the guys in War Room, say, hey, there are winners and there are losers, because the one I got stopped out on pound yen was an exact trade like this one. Pound dollar, you can take a look here. We're back up into a structure level here. We still haven't filled the gap that exists right here, and so we may see a little bit more upside there. Let's move down to Aussie dollar. Again, I'm running through them relatively quickly this week, but there's several things I'll just show you here. Structure has been violated. Previous structure highs have been broken. So if the market can pull back down into this range around 73.57s, that's going to be the zone that I would look for an opportunity to buy. Now, naturally, I wouldn't do it on the daily time frame. If I was using this for my higher time frame analysis, then I would probably jump down to an hourly time frame and take a look at what are the other conditions for my trade. What else is required according to my trading plan? Does it require a double bottom with bullish divergence? Does it require some sort of doji candle? Does it require some sort of indicator or oscillator like a market being oversold? What is the combination of tools that I use to give me my entry signal? And again, those should be non-subjective, or as non-subjective as you can possibly make them, in order to try and eliminate that subjectivity from your trading and give you the confidence that what you're doing is going to produce a positive outcome. This one, New Zealand yen, you can look for a 26.18 here. We've had kind of we had a violation of the double bottom, so that's not a good example, but there's a couple of other ones in here that are. So here's a perfect one on dollar yen. Nice little double bottom here. The market is rallied up. If we can get a violation of the highs right here, if we can get a violation of that, we can look for the pullback into the 618. And for those of you who don't know what the 2618 trade is, it's available on YouTube. You just find it. It's a training deal that I do for free. It's about a 2-hour training, and all I do is teach you a little bit about structure analysis, and then in the culmination of that, teach you this little strategy called the 2618. And it's a mixture of Fibonacci and structure analysis. It's very easy to learn. And so if you don't know about that, it'd probably behoove you to go check it out, because we talk about it a lot, both here in the Forex Market Preview and in War Room. Same thing here on Canada yen. A violation here of the highs as the market rallies. Get this trend line here. If we can violate this to the upside, we can look for the pullback into the 618 retracement for a buying opportunity. The idea being that the market has been bearish. We had a retracement, retested the lows held, then the highs, the previous high gets violated. Boom. That should signal to us that we're looking at a shift in trend. It doesn't always work that way. But again, over time, doing it again and again and again produces some pretty nice results. Pound New Zealand. I'm trying to see if there was anything else in here other than gold. We've got the reverse of what we just looked at here on Aussie dollar. So we had the market rally, boom, right? Pull back, outside return, higher low, new structure high. We pull back. Where do we pull back to? Look left. Structure leaves clues. Right there to previous structure support. Resistance becomes support. Then we rally back up. Previous structure resistance holds. And then the market violates those lows. Now, as we rally back up, what do you think is going to happen when we hit this 52.94s, 53s area, right? Likely at the 53 area, we're going to see a little bit of resistance. Opportunity to potentially sell in that area. Again, given the rules. We're talking here about structure and how markets move. Moving on. I think that's probably it. Bitcoin has not really been doing, Bitcoin's been flaky. I don't trade Bitcoin, but I show it to you guys from time to time because I know a lot of you do trade Bitcoin. And anyway, we already talked about what happened with gold dollar cross. So that's basically it for this week, guys. But remember what I said. The dark times are never as dark as you think. The highs are never as high as you would hope. But again, over time, if you maintain your consistency, if you get involved with a system or a strategy, whatever that may be, that you've proven to be consistently profitable over time, that you've done the hard work on, because that's really what separates the good traders from the bad, are the guys who have done the work. They've done the back testing, they've tested the formula, they've worked on it in real time, They understand a little bit about money management and trade plan development. They understand how the market works and how to read structure. And they've assembled for themselves something that really works for them that they can follow. And then they come in every single day and they try their best to follow that plan. And some weeks are good and some weeks are bad, but over time, those guys have the highest probability of being successful. Be one of those guys. And I'll see you back here next week for another edition of the Forex Market Preview. Until then, good luck, good trading. I'll talk to you soon.